Are you that person that buys a stock and sees it drop immediately? Wouldn't it be nice to just buy a stock and see it make you money right away? In this video, I'm going to tell you when the best time to buy a stock is, and if you stay tuned till the end, I will tell you when the worst time to buy a stock is. Hi, I'm Giannino. I tell you how to make money, grow money, and invest money, so please like this video, subscribe to the channel. I would greatly appreciate it. I've been trading the stock market for the last 4 years, and I quit my job 4 years ago to do it. So I definitely know when the best place to enter into the market is, and I actually know when the worst place is to enter into the market because I've done both multiple times. I've turned my account from $3,000 all the way to $45,000, and I've also lost a lot of money in the market. So I really want to teach you all I've learned in the past 4 years in the stock market. I want to give a quick warning. This is not a day trader's video. This is a long-term investor's video. So this is for someone who wants to find the best place to enter stock long-term and maximize those gains. Let me give you a quick example of how you can maximize those gains to make a huge difference, like a 300% difference. So in 2009, if you bought Amazon in the beginning of 2009, you would have made 7,000% return today. But if you bought Amazon at the end of 2009, you would have only made 2,000% return. Just showing you the difference of buying at the right time, which is a 300% difference. So now that we know the potential of entering at the right time, I want to tell you when the best time is to enter. But it should be noted that if you're a long-term investor, there's really no wrong time to enter the market because you can ride out any dips if you hold a stock long enough. But for those that want to maximize those gains and have a bigger account value, it's really important to pay attention to this next point. So the best time to enter the stock market is when people are fearful, because this is when they're mispricing stocks and giving you the best discounts out there. So let me give you a real world example. So let's say a store is going out of business. You could say they're being irrational and they're not pricing their products correctly. So they're pricing all their DVDs for $5, and then you find some DVDs in that pile you can sell on eBay for $10. So buying one DVD for $5, you can go on and sell it for $10 a couple days from now or maybe a week from now. Same thing in the stock market. There's many periods in time when a $5 stock is actually worth $10, and you may not see that potential in a year or two maybe. Sometimes you have to be patient, but during these times, it's one of the best times to invest and get into the market because it lowers your risk when you're buying the stock at a discount, and when people are fearful, that's usually a good gauge that you should be getting into the market and putting some money in. And some of the best times to enter the market are during recessions. During these times, the market will drop historical percentages, 40, 50, 60%, and you're going to see a lot of things trading at levels you never thought was possible. But it should be noted recessions only last 8 months to a year. Here's a chart of the last 100 years and all the recessions that occurred, as well as the length of time of each recession. We can see in 1929, we had a 43-month-long recession. This is definitely an outlier. Most recessions only last anywhere between 6 and 16 months, so they're very short in perspective. So recession is over relatively quickly, and that time period you can put your money in is very short. So you have to be quick and you have to be decisive, and you cannot be scared during these times. When recessions are over, we enter periods called bull markets, which are generally longer than 1 to 3 years. The last bull market was 11 years. So if you invested in the recession before that, you would have made 300% return in the SPY. And here's a chart of the average length of bull markets since 1871. And down here you can see we have 67 months as the average, with an average return of 178%. So if that doesn't get you excited, I don't know what else will. And if you divide this by 12, that comes out to 5.5 years. While recessions typically last 8 to 12 months, like I said. So recessions are really blinks in the stock market, and bull markets really outlast those times. There's also very few of them out there, so when you can find a recession to invest in, it's really a blessing and it's not anything you should be fearful of. But just like I said, the last recession was 11 years ago, so it was very hard to find huge discounts in the market. Let me give you another place to buy stocks that do produce a great discount. This is when stocks release their earnings reports. Every 3 months, the stocks give out their financials about how the company is doing. It's basically a snapshot in the company. During these times, they may miss projections and the stock will drop a dramatic amount. Right here are past earnings projected movements. As you can see, they were projecting a 4.2% move post earnings for Apple, 6.5 for Amazon, and then 4.7 for Alphabet. So all this means is you can see these stocks this much percent cheaper after earnings. So if you like the stock, you can buy it at a huge discount if their earnings aren't as great. These are some of the best times to invest because after the earnings report comes out and the stock drops, it may continue to drop months after until the next earnings report when it blows it out of the water. So sometimes a bad financial statement or a bad earnings report could just be a hiccup in the company's sales and revenue, and over time they're really going to pass that and do very well. So there's a lot of emotions that are involved with the earnings seasons and those financial reports, but if you can look past the emotions and buy when the market is freaking out, that is another great time to buy the stocks you want and find them at a great discount. Netflix is probably the greatest example of this. As you can see, this chart has gone straight up for the last couple of years, but every time we hit an earnings report, the stock sinks every single time. But the long-term direction is still up and higher. So it just goes to show you, you can get stocks at really good discounts after earnings reactions, although it doesn't really affect the long-term trend of that stock. So just to recap, the best time to buy a stock in the stock market is during recessions, emotional periods, or maybe earnings swing when the stock is moving after those financial reports. During those times, like I said, you could see a $5 stock that's worth $10, and it just allows you to buy things at huge discounts because, like I said, when people are emotional and they're freaking out, it's one of the best times to invest. One of the best investing quotes goes, "Buy when there's blood on the streets." Now I want to tell you the worst time to buy a stock because I see everyone making this mistake, and I just want to make it apparent that when you're buying something that is super hyped up and everyone is buying it, your neighbor's buying it, your mom's buying it, is usually a sign that you should not be buying that stock. Let me give you 2 examples of the hype train that everybody rode and then everybody lost their money on. Bitcoin last year went from $20,000 all the way down to $4,000, making that an 80% drop. My next example is Tilray, which is a marijuana stock, which IPO'd a couple years ago, and this stock dropped 90% from $300 all the way down to the mid-30s. So the key here is getting into the hype before it happens, finding things that have great potential, and then selling them when everybody starts buying them, basically. When everyone starts talking about them on the news. This is probably the best gauge to understand how much hype is in a certain stock. This is Bitcoin, and as it's gained popularity, you see it on CNBC more and more. So the more times you see a certain investment or stock on CNBC, the more you should be wary that the bubble is forming. You can kind of recognize the hype in many forms. Once the hype comes, you really need to get out of that investment because any investment can become overvalued just like any investment can become undervalued. It's all due to emotions, and you can recognize those emotions and actually make profit from them. Just for example, one rule I have is when I buy things that are right before the period that they're getting hyped up, I will sell them when I hear too many people talking about them and too many people buying them. So they have a saying, if you hear your gardener talking about a specific investment, that's probably the best time to get out. So let me recap that one more time. The worst way to enter the market is to buy something that is hyped up or buy something you hear everyone talking about. That is the one thing you should avoid if you're ever going to invest your money in the stock market. So now that I told you the best way to enter the stock market and the worst way to enter the stock market, I want to give you a video I think you're going to love. This is when to sell that investment you just bought. It lists a bunch of different criteria that helps you decide when you should get out of that stock. That video is to the right of me. I think you're going to love it. And if you want to trade with me personally 7 days for free, click the link below that. Matt signing off. Peace. Just sometimes you make a terrible investment. It literally can happen to anybody at any time. That's the risk of investing. But your reaction to these situations can greatly affect your success.